The Federal Reserve just announced critical data that can preface exactly how the stock market is going to perform in 2026. I'm going to go over the top 3 stocks that I will be buying into 2026. In fact, one of them today, I upped my position to 198K. But let's go ahead and dive into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes. Only results may vary. Now, if we take a look at the account, we are at brand new all-time highs, almost at 1.5 million. Now, if you do want to follow along the journey of hitting my 8-figure goal in this portfolio, be sure to be subscribed by clicking the subscribe button down below this video. Also, if you get any value out of this video, please hit the thumbs up button for me. I would greatly appreciate that, and I appreciate you being here. Realized gain loss on the day. Current month up 7K, but we have a long month to go. But today, we're up about 2,200 bucks, closing out Hood and STX puts. Obviously, results vary month to month, day to day, but I'm not the only one doing this. As you can see here in my private mastermind, Options Trading University, we now have 670 members, all sharing their inspiration. As you can see today, we had clients closing out some trades, sharing their inspiration here. Now, if you do want access to my leaps, entries, and exits and my Ryan's Trades channel, that'll be at the top of the description down below. Also, I give away free trade ideas on my Instagram, on my X account, and my free newsletter. All 3 of those are down below in the description. Be sure to be subscribed to those because they're free. Now, let's go ahead and dive right into it, okay? So the Federal Reserve approved a 1/4 basis point rate cut today. That was huge for the markets, but they also elaborated on some additional data and additional perspectives on 2026. In fact, the Fed announced it will resume buying Treasury securities. The central bank will start buying 40 billion in Treasury bills beginning Friday. This is known as quantitative easing. When the Fed buys Treasury bills, puts them on their balance sheet, they're basically buying debt, right, which lowers those yields on the treasuries, bringing down interest rates and more liquidity into the stock market and into markets in general. So that was huge news. Now, the CME FedWatch tool, based off of what Jerome Powell said, hey, we did a rate cut this time. We will be open to being flexible for the next time, but we don't know if we are going to get another rate cut. That changed the odds a little bit for next year. Okay, so the rate cut in April is still priced in 80% probabilities, but those odds went down a little bit. 96% probabilities for a rate cut in December, or actually September. So 2 rate cuts are still being priced in. So we'll just keep a close look on that. But basically, the Federal Reserve gave their economic projections. Okay, I'm going to break this down very easily. Basically, they went over their projections for GDP, unemployment, core inflation data, and core PCE inflation. So let's kind of break that down, their projections. So the GDP outlook, the Fed now expects slightly stronger growth, especially in 2026, economy holding up better than before. Now, we knew this looking at the GDP data over the past few quarters, stronger than expected. So the Fed is basically saying, hey, the economy is pretty good, a lot better than we expected. Unemployment outlook projected slightly lower in coming years. The Fed does not expect recession-level jobs weakness. So they see actually that the unemployment is not as bad as they thought based off of the data, okay? There are jobs being created still because of AI. Surprisingly enough because of AI, but also jobs increasing unemployment a little bit because of AI as well. So it's kind of stabilizing, but again, this is what the Fed is saying. Inflation outlook, PCE and core PCE were revised lower. Inflation is cooling faster than they thought in September. Very good for inflation. It's coming closer to their 2% target. The Fed likes that. That's what they said. Hey, inflation is cooling. The rate path outlook. So Fed funds rate path stays steady, even with stronger GDP, lower inflation, no new tightening. Cuts still expected in coming years. So they do expect rate cuts going forward, but just maybe not as fast as expected because everything is going pretty well in the economy. The rate cut was on good news, not on bad news. So this is a good thing, right? Unemployment not skyrocketing to recession levels. GDP is still strong, so the economy is not slowing down by any means. Overall Fed outlook, classic Goldilocks update, stronger growth, falling inflation, stable labor markets, no tightening signals. Market interpretation, this is bullish. The lower inflation plus stable growth equals a dovish tone, which is exactly what we want from the Fed. And this is the combination the market wants. Okay, so bottom line, Fed is saying soft landing, remains on track, inflation easing, growth steady, labor strong, and future rate cuts still ahead. So this was pretty much the best news we could hear from the markets. And QQQ, rallied a little bit today. Okay, up 0.41% at the close. So my outlook on the markets right now is extremely bullish. I think that we are going to head back up to previous all-time highs, 637 on QQQ. The VIX has dipped back into the 15s. We could see this head sub 15 if we do. Confidence and greed is back on. And that's kind of when the FOMO starts kicking in. Right now is kind of when, people are kind of waiting on the sidelines. Okay, you first, or who's going first? Who's going first? And we already see some names getting bought up as we speak. Okay, so the VIX sitting at 15. Let's look at the VIX cash allocation levels. So essentially with the VIX on the lower end of between VIX 15 and 20, there's still a little bit of fear in the market, slight fear. Essentially, I could have 20 to 25% cash on the sidelines just to be safe. Any spike of fear in the markets would allow me to deploy some of that cash. Right now, I'm actually at 16%. So I'm not following my VIX cash allocation principles to the T because I'm extra aggressive right now. What I'm doing is I'm staying a little bit more on the aggressive side. And then once the QQQ gets back up towards those all-time highs, like once we breach, let's say 634, that's when I will go back to being 20 to 25% cash. So I'm just waiting for a little bit more of an up move here in the markets. And, we do have some more data coming out, unemployment, right? Core PCE this week. So things could shake up, but things could also head much higher from here as we already see some names getting bought up. Now, if we look at the 10-year treasury, yields are coming down. Next year, I'd like to see this, the 10-year treasury yield somewhere between 3.4 and 3.6%. I think we could get in between there, bringing down interest rates even more. So the first stock that I purchased a lot of today, or actually sold more cash secured puts, was STX, Seagate Technology. So Seagate just breached new all-time highs today. One of the strongest stocks on the board. Now, while it's not at a discount, right, I'm still very bullish and I still think there's opportunity here for cash secured puts, okay? So Seagate is the first one that I added to today. Basically what I did, let's dive into the portfolio. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. But what I did was I actually rolled up my 245 puts, closed those out at a profit, and rolled these up to 265. So if we go to the position, actually, let's go back. The current position in this current portfolio is 156K. I have probably another close to 100K in another portfolio. But this one, as you can see, I have the 265s for January 2nd. Okay, if I were to open up a new trade tomorrow, let's say, I'd go out to January 9th or January 16th, either one. Let's go January 9th, okay? And what I would do is I would probably go to that 25 delta, okay? The 24 delta is the 270 strike. I'd sell this put, pick up 610 bucks or probably closer to 650, maybe 700, which would be a potential ROI of 2.76%. So pretty good, right? Pretty good return there. Very safe, right? For my portfolio. Now, results vary based off where the stock's at. If the stock goes down, then, I'll be forced to buy the shares at 270 if it finishes below 270 in 30 days, right? But I like that return profile there. If I wanted to be a little bit more aggressive, I'd probably go out an additional week in time. I'd go January 16th, and I would go to those same 270s, pick up a little bit more, about 800 bucks, which is a potential 3.75% ROI. Results vary there. So that is the play for STX. I'm already at the 265s. I'm probably going to roll these ones up pretty soon here, the 250s, as I'm very bullish. I think STX could continue to hit newer all-time highs, considering that it's one of those stocks in the portfolio that has a lower PE in the AI space, 38, not too bad, lower than NVIDIA, which is trading, I believe, in the upper 40s as far as PE ratio goes. So STX is the first stock. Let's talk about the second stock, okay? Big news came out today. The Navy partnered with Palantir to announce a $448 million AI tool for shipbuilders and repairs, okay? The Navy's 4 public shipyards and 2 identified private shipyards are working with Palantir for a program the service is calling Ship OS as part of a new $448 million effort. Okay, Palantir saw a major spike up today from that news, and I think it could continue higher here, and all dips on my end will be bought, okay? I think that, sure, if we dip down, boom, good opportunity, but I think we head higher. Considering that this stock is still down from previous all-time highs here at 207, it's still about 9.78% off from those all-time highs, and I think that, with Palantir's strong earnings, continuous partnerships, continuous deal flow, and strong cash flow, I think Palantir's headed much higher from here. I think we'll see maybe above 200 by end of year. So with that being said, okay, let's go into the portfolio. You could see that my current position, all right, I have 900 shares about to be called away at 185 in 9 days and 180 in 16 days. Okay, so I'm gonna have a bunch of shares called away at a profit, collecting premiums on the covered calls there as well. Current position is around 190K, but I'm going to be establishing more cash secured puts here. I have the 170s, and today, or actually, this week, we'll go out to January 19th. Actually, I'm going to go out to January 16th just to give myself a little bit more time. And I'm going to go to those 175s. I like the 175s. I was assigned on all of these 900 shares at 177.5. So it's kind of nice that I'm able to play these cash secured puts 2 months later at the same exact strike. So I don't mind getting assigned there. It's a 29 delta, so pretty, a little bit aggressive, but pretty conservative there for me, with a potential ROI of 3.31%. So I like that play, right? Results vary, but if the stock goes below 175 again, I'll get assigned, cool, run the covered calls in the 180s, 185s, collect some premium and some appreciation and do it all over again. That's why I love the wheel strategy, because I'm able to get in, get out, get back in, sometimes at the same price, sometimes lower, right? So yeah, pretty good ROI there for me. And those would be the ones that I would be adding going into next week, considering that I might get my whole position called away. Okay, so that's Palantir continuously running up. I think that, again, probably going to breach 200s by end of year. The last stock is Robinhood. All right, Robinhood is at a great price point, okay, still quite down from all-time highs, from previous all-time highs, and they're slowly and quietly expanding in the background, okay? They launched their yield on Ethereum and Solana December 9th. They're gonna start their staking programs for users, as well as they acquired an Indonesian brokerage, okay? They're trying to expand their footprint in Southeast Asia, which I think is huge, okay? This is extremely huge considering there's other brokerages like Moomoo and Tiger platform, which is, are dominating those markets. Robinhood wants to expand globally, okay? This is exactly what we want to see. Crypto trader acquisition, more funds on their platform, right? And I think they're pretty undervalued here. So if we take a look from all-time highs, all right, the stock is down about, let's just call it 12%, okay? Down 12%. I think the next stop right here is probably this 144 area. If we breach that, we head back to all-time highs at 154. We're not even overbought on the RSI. We're far from being overbought. PE ratio is at 56, and volume has been pretty low. So let's go into the portfolio. You'll see that I actually upped my position today to 198K worth of cash secured puts. I have the 125s. These are the brand new ones I put on. And then I have the 124s that are expiring in 16 days. I'm up 64% on them, as you can see, but I'll probably close these out sometime next week and go ahead and roll up and out in time, okay? So current premiums being collected for me is 9,600. But again, I'm probably gonna go out to Jan 16th, give myself a little bit more time to be right, and I'll go to the 125s like I did today, 30 delta, 4.6% potential ROI. Very good returns for me. I like this price point, 125. Give me the shares. If it goes below 125, totally fine getting assigned. I don't care if this thing goes down to 105. I'm fine owning it at 125. Okay, that's why I like selling cash secured puts, because sometimes you'll get that opportunity, right? Like here, we were selling, the same ones that I have, the 124s. The stock went below. It didn't finish there by expiration, right? Expiration is in a couple weeks, and the stock went back up. So I'm not going to get assigned where I wanted to at 124. So we just continue the wheel, continue selling cash secured puts. But I like those 125s because from current prices, right, that's about a 7.5% discount if I get assigned, right? And from all-time highs, it's about an 18.8% discount from all-time highs. I think that Robinhood is a $200 stock in my opinion, okay? So great prices there, good premiums, 4.6% potential ROI, and we're not overbought on the RSI. So Robinhood is continuing to be one of my favorites in the portfolios as far as premium returns and where it's trading relative to where it was in the past. So if you enjoyed this update, please give it a thumbs up, and I will see you in the next update video. Take care.